Global share markets performed strongly in July, and this was a surprise. What we saw was better than expected US corporate profit data, as well as positive global economic data. American shares were up 3% for the month. We saw some better retail sales, employment and housing data in the United States. For Europe, we saw a similar plus 3% gain for July, with the hopes for further monetary stimulus in Europe itself. The British share market surprised on the upside, considering the Brexit vote to leave the European Union, as well as weak business and consumer surveys. British share market drew support from the hopes for an interest rate cut. Japanese shares rebounded strongly by plus 6% in July, but this comes after a near 10% fall in June. There were hopes for both budget stimulus as well as monetary stimulus from the central bank, which was seen as supportive of the Japanese share market. Australian shares delivered a robust plus 6% gain in July, despite the very close federal election result. Higher iron ore and coal prices supported the commodity sector. The low June quarter inflation result gave hopes for another Reserve Bank interest rate cut, which supported the real estate investment trusts, consumer stocks and infrastructure stocks as well. British bonds made historic lows in July, given the weak business and consumer surveys and hopes for another interest rate cut there. Global bond yields drifted sideways in July. The American Central Bank's easy policy stance, as well as low inflation, particularly in Europe and Japan, supported the global bond market. The Australian dollar performed strongly in July, given higher commodity prices, particularly iron ore and coal. The Australian dollar also drew strength from the easy monetary policy stance by the American and European central banks. The American economy's data was on balance better in July. There was a disappointing June quarter GDP result, where America's economic growth came in at only 1%. However, this represented a temporary negative for inventories. There were more robust gains in terms of retail sales, employment and housing activity. The Federal Reserve kept interest rates on hold, but with inflation pressures starting to pick up, the case for higher interest rates is strengthening. The European economy showed resilience in July, considering Britain's decision to leave the European Union. There were some solid business surveys. However, inflation remains low in Europe. Hence, there is a case for more monetary stimulus from the European Central Bank. China's economic activity was solid. China's economic growth for the June quarter came in at plus 6.7%, which matched the March quarter's results. There was some solid industrial production data, running at plus 6% annual growth, while retail sales remained robust at plus 10% annual growth. Turkey was in the spotlight given the attempted military coup in mid-July, which caused concern about political risk. However, the rapid restoration of Turkey's political leadership and interest rate cuts by the Turkish Central Bank supported emerging markets. Brazil's economy, however, remains in a deep recession, with retail sales weakening and inflation near 9% ahead of the Olympic Games. Australia recorded solid economic activity. There were moderate job gains, but there was an encouraging rise in the NAB business survey in terms of business confidence and conditions. However, the June quarter's low inflation results raised hopes for another Reserve Bank interest rate cut. The Consumer Price Index showed annual inflation at only plus 1%. This is well below the Reserve Bank's 2% to 3% target.